Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the MarketSite studio, we have Dave Rudd. He is the president of InspereX. We're actually going to talk about some opportunities in the bond market and potentially buying some individual bonds and the benefits associated with that. Dave, it's great to see you. Welcome to Trade Talks.
Thank you, Jill. It's good to be back.
And this is good, talking about opportunities in the bond market. It's not something that we've been discussing for a number of years now. Where do you think the market is going as it relates to fixed income?
Well, thank you for having me. It's good to be back. You know, the Fed and the administration are taking aim at inflation. They've been very clear about that, and the market has reacted. So we've got rates now, 4.5% in the front end of the Treasury market, but the yield curve is very flat. In fact, it's inverted. So 2s to 10s, the 2-year Treasury to the 10-year Treasury are inverted, which creates a lot of opportunity, but it also signals a little uncertainty. So where are we going? That's a tough call because they're going to do what they need to do to fight inflation, and yet the Treasury market cannot get through 4.5%. We're hit this resistance at 4.5%, and that's really where it sits today. I think the 2-year is the highest yielding Treasury, right around a 4.40. So great question.
Right. Well, let's talk about the benefits of buying individual bonds, because there is a generation of investors out there where all they've heard about is equities. We know what the equity market has done, perhaps ETFs, some options, but talking about individual bonds really hasn't been a part of that conversation for them.
It's been, we haven't seen these rates in over 20 years,
right,
with the exception of a very brief window after the 2008 financial crisis, but those rates evaporated. So here we are today. It feels like we're here to stay. Again, we don't know where we're going, but this mode that we're in feels a little bit more long-term, and it's creating a lot of opportunity. When you look at the different asset classes, in particular tax-exempt or tax-advantaged, whether it's U.S. Treasuries, where it's state tax-exempt, or the tax-free municipals, where you're federal, state, and local exempt, we're seeing yields, for example, in munis of 3 to 4.5%. So you're talking in high-tax states, for high-tax earners, you're talking about 6 to 9%. And so we haven't seen these rates in a long time, and it's getting a lot of attention. Right.
And chances are we're not going to go back down to that super low interest rate environment that we've seen if we want to have some sort of normalcy in the market here. How are investors and advisors using bonds now with their clients? What are the recommendations that they're making?
Yeah, and I'm glad you mentioned the advisor. I think now more than ever, it's imperative for investors to work with a financial advisor, to work with financial planners. And we at InspereX don't manage money or recommend securities. We don't provide advice. We're built to support those advisors and those asset managers to achieve the objectives they want for their clients. We're seeing really strategies being deployed across the board. There are some investors that are staying very short, and they're taking advantage of that shape of the yield curve, and they're buying the 1 to 5 year sector of the curve. And we're seeing other investors come in and they're locking in these rates. And part of the benefit of owning those individual bonds is you can, for example, ladder a portfolio from 1 to 10, 1 to 15 years, and if rates do go higher, your bonds are starting to mature on a schedule where you can reinvest at the higher rates. So not only can you lock in longer periods of time at the higher rate, but you can also take advantage and reinvest. And then you can also do some tax harvesting. So if you bought a bond at 2% or 3%, and now that bond is at 6%, well, you can sell that bond that you've locked in your 2% or 3% yield, book a loss on your principal, which is never nice, but you get to use that loss and carry it forward indefinitely, and you get to lock in a higher rate. So there's a lot of advantages to buying individual bonds.
So tell me about BondNav. What is it telling you at this point?
Yeah, thank you. BondNav is our platform. It's aggregating all of the various marketplaces, and it's aggregating a lot of the customer flow, some of the institutional accounts that are buying and selling. We're seeing a lot of new entrants into the market, and we're seeing a lot of volatility. So, on any given day, the market is for sale, and we see very sloppy pricing. Liquidity is a little bit challenged, but there's people right there ready to take advantage. And then the next day, everybody's a buyer. And so we're seeing those flows. It's aggregated on one system. And our goal is to provide that system to the money managers, the wealth managers, so that we can help them with their strategies for their clients.
All right. Appreciate the insight. Great to see you. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.